Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Friday, February 18th. Don't forget to run your player at 1.5x for maximum efficiency. Taking a quick look at futures, we are up overnight on news that Secretary of State Blinken is supposedly going to meet with the Russian ambassador next week. So that lifted futures overnight. Oil's down about 2.6%. Gold's down a little bit on that, about 0.5%. Equities are up about 0.5%, give or take. Looking at macro today, not a whole lot. Existing home sales and also leading economic indicators. That will be a good one to watch. And then on the earnings front, we've got DraftKings, John Deere, and Bloomin' Brands, Outback Steakhouse Company. As I'm just peeking at futures now, they're coming off a little bit. It's 6:47 as I'm starting the video. And before we get into the charts, a couple things. Number one, today is February options expiration, so make sure you run down your positions. Make sure you don't have anything expiring today, and if you do, make a decision. Are you going to close it out? Are you going to, roll out and buy some more time? Anyhow, just make sure you deal with that. And also, the markets are closed on Monday for President's Day, so today is going to be really, really important as far as market sentiment goes. Going into the weekend, we always say, the hours between 2 and 4 in the afternoon on a Friday are, who wants to hold over the weekend, and that's doubly important heading into a 3-day weekend. And, I've been wrong before on this, but I can't imagine anybody wanting to get long into this 3-day weekend. So my bias is going to be to the downside, even with this pop here this morning. I think it's always difficult to predict what's going to happen. I try to make an open mind, but you're here for commentary, so my bias is going to be down, just for the fact that what happened yesterday and the 3-day weekend with the tensions over in the Ukraine, news over the weekend, anything could happen. So, like I said, my bias is going to be to the downside today. Also, I want to give you a little guidance on trading these volatile and more or less bear market conditions. I've got a quote in there in the blog site today from Bruce Kovner. He's a market wizard from the 70s and 80s, and he says that most traders trade too large a size and gets them into trouble. And I think I've mentioned over the last few weeks that I've been trading smaller. Usually when volatility kicks up, that obviously means the intraday moves are going to be higher. So you've got to strike that balance between being panicky about your position size, because you're looking at your P&L every 5 seconds. And, it makes two clicks up and you get, if you're short, you get panicky. Or if you're long, you get panicky. And then it comes right back down and all you're seeing is the intraday volatility. So if normally vol is low, your gains and losses on a particular position or on a particular day are going to be smaller. So you can justify a little bit larger position size. But when volatility doubles and you're getting these 3% up days and 3% down days, it's easy to get panicky. So if you cut your position size down, then you can get back into your comfort zone on the volatility, or you can just put a piece of masking tape over your P&L or hide it so that you don't get worried about that, and then you focus on levels instead of being distracted by your P&L. And so under that kind of regime, you can size your position appropriately, then hide your P&L, and then just trade off the charts, off of your levels. And then that way you won't be distracted by, oh my God, I just lost $150 or gained it or whatever. And then you can just use your objective levels as a trading guide. Also, in these type of conditions, when things go bearish, I simplify, simplify, simplify. What do I mean by that? I gravitate to the indexes. I gravitate to the FATMAAN names, because those are the names I know and they are the market, as we've discussed, on a market cap basis. And these days on the ARC complex, and we've talked about that, the Ponzi's, the bubble names. Normally in an ETF, they're dominated by cap weight. If you go to XLY, it's all Amazon. If you go to XLC, it's Google and Facebook, and that can be advantageous, an advantageous thing just in of itself. But in the case of ARC, she has done all the hard work of finding the bubble names, the Ponzi names, the names with negative PE ratios or with PEs of 3,000. They'll, I don't want to say never make money, but the valuation is not in line with reality. And so as liquidity dries up, as we've talked about, in a rising rate environment, as we've talked about, those names are just not going to do well. So I focus in on a select group. You're welcome to, if you're very comfortable trading a particular set of names, I recommend to stay inside your lanes, stay with the names rather than saying, oh my God, some name is going down, I'm going to jump into it. I gravitate to the things that I know best and then focus on that. So let's get into the charts. Got a lot to show you. Starting here with Bitcoin, it's now testing that 40,000 level, which is key. I think a break below at least sends it down to back test this downtrend line, but probably more likely a move back down to this 33,000 range, which is the top of a support band. So if you've been trading that, you probably know that already. But even if you're not, I think it's going to be a good risk on, risk off indicator. And so if you keep that on your dashboard and you set your alarm at 39.5 or wherever you want to set it, you get a break below 40,000, which should be good support. You'll know that risk off environment persists. Now I'm going to check out the oscillators here because they've been so good for us. And you can see, yes, they came down, but they're not anywhere near where you'd expect, an oversold kind of a bounce in terms of the oscillator. So we're right here in the middle of the range, not really that predictive. And if I jump over to the Nasdaq Oscillator, you can see here, we're still positive. So even though we've had, a good day of selling, it's not like these oscillators really plunged down. Now, moving on to gold. This has been a really frustrating trade, but now the chart is opening up. We talked about that, 2 days ago, Wednesday. I hope you got in that trade, but if not, don't worry. Look for the next opportunity. Here's gold on the weekly chart. We had a big run up in 15, in 19 and 20. Spent 18 months, 16 months consolidating in this triangle pattern, and we've just recently broken out. And you notice here we got a breakout in RSI, and we've got PPO just now going positive. So gold looks really good. Now you can say, well, it's just Ukraine, and then when Ukraine settles down, it's going to fall like a rock. You can obviously take that view, or it might be a little more nuanced than that. So we're going to have to see. And I think, what I want to show you here also is, oh, sorry guys. Here's the monthly chart. And you can, this puts the whole thing in perspective of going back over 15 years, back to '04 when the GLD was created. To me, this looks like you can either draw it as a pennant or as a bull flag, as I've constructed it here. We spent all that time consolidating. Notice that RSI never went bearish, and now PPO is not only still bullish, but you've got an emerging, the PPO line is starting to curl up. You get that bull cross, and that's going to be really, really bullish for gold in the long term. And I did the measurement, and this bull flag breakout projects to 240 on the GLD. So I think one of the problems that we've had, or I've had with gold, especially lately, is just the relentless chop while it was in that consolidation pattern. And I think maybe a way to play is just say, okay, go out 6 months, take a view on gold, set a stop, and then just forget about it. Don't try to actively, trade it from week to week, or, on shorter time frames, and just say go out to September, or go out to January of 23 and say, I'm bullish gold. I'm going to allocate $1,000 to it or whatever in your portfolio. Get yourself some calls. You can sell calls against those to kind of juice up the returns a little bit, and just stay long, and then not worry about the week to week volatility. Just go ahead and set a stop, and if it comes back and takes you out, then it takes you out. But from a longer term perspective, looks really good, both on the weekly and the monthly chart. Here on the gold miners chart, GDX, we've got this downtrend line that price is just now wrestling with at around 35. You get that breakout there, and then it really opens up the chart towards 39, and then the old high was up near 44. So notice here we've got a breakout on RSI, and PPO is turning up, but still not in the bullish regime. So one thing I will remind you of in the miners is that back in the COVID time frame, when there was that big liquidity event, they sold everything. So just because you sell what you have, when you're trying to raise cash and there's a panic, be open to that possibility that they just sell everything, no matter what. So that's what we saw here in this deep plunge on GDX. But yeah, I mean, miners look good, and usually the miners are going to give you a higher beta than the gold. It's gonna be gold on steroids, if you will. Okay, looking at SPY daily, bearish regime RSI, bearish regime PPO, breakdown, kickback rally, breakdown. We've got a nice downtrend line to shoot against, and we're sitting right in and around the 200 here at 438. So I would use yesterday's close as your pivot point, and if you get a kickback rally up to 442.5, 443, back into this resistance zone, I would be short there, and looking for a test back down to these January lows at a minimum. We've got a level here at 432. I think would be a solid test, but then you've got these long tails that reached down to 427.5 and actually down to 422. So those could be levels that are probed as well on SPY. Here we get some resolution, and you notice that price has been consolidating in this symmetrical triangle, and yesterday we got a break below, and that I mean, nothing's for sure, but usually on a break of a decent trend line, you'll get follow through. Now what could happen is, just like I said, come down and get a back test into this line at around 440. That could result, or I would anticipate, a rejection there, and then come down to test these prior lows. It doesn't have to be today. It can be next week or whenever. But like I said, given this is a 3-day weekend, I think there's going to be a lot of people, especially people that trade the daily time frame, that get home from work and then look at their stuff and they see what happens, and they said, oh, time to get out, for this 3-day weekend. So I think there will be a downward bias on today. Be ready for anything, trade level to level, but I believe the bias will be down. SPY 30-minute got a great level here at 438, right at the 200 to shoot against. As we know, you get below the 200 and then price is on the wrong side of the chart. So that's going to be a really important line for price today. Same kind of a look on QQQ from the standpoint that we've got a nice downtrend line. We had the initial plunge, we had a kickback, and then it rolled over again. The difference here is we're well below the 200 on QQQ. This has been the area where most of the selling pressure has been focused, and you can see that we're already down pretty close to those January lows. I think this 344 area will be important, and then this 340 area for sure will be important. You get below, start seeing bars close below 340, you'll know that the next leg down is underway. Very much the same look on the QQQ 2-hour as we saw on the SPY 2-hour. We've got an uptrend line off of these lows. We've got the symmetrical triangle, and then that broke yesterday into the close. So now I think today that 344 will be a really good line to use. You see the resolution here on the 30-minute chart. Getting a break below 242.50 is where the volume over price bars pull back, and so that'll be an important level to hold if the Qs do in fact come down to probe that area, because if you don't get a bounce here, then all of that volume over price support fades away, and then price can move faster down in this area. Just showing the IWM 2-hour here. There hasn't been as much selling pressure in IWM. Maybe that's because they're mostly smaller, domestic U.S. focused companies. But be that as it may, it's still got a bearish chart, because remember that we have fallen out of a year-long trading range where the lower bound was 210. We broke that back here. We made an initial plunge. We revisited the scene of the crime at 210, and now we've broken this, and I just penciled it in. It's not, the greatest bear flag in the world, but it'll do for now. The initial plunge, bear flag, and now the bear flag has broken. So today I would just use 200. I've got this gap being filled here. I just left it on for visual reference. I would just use 200 today. If you're not in it, set your alarm right there at 200 or 199.90 or 75, wherever you want to get engaged with the chart. Set that. If you get a break of it, then I think we're coming down to 198 and then 196. Here's some additional levels for you here. I don't know if you really want to. The reason I say 200 is because, do you really want to take a short at 200.75 just to come into this large volume over price bar here? Probably not really worth it, because you might get a bounce right there, or likely get at least a reaction, and then if it comes down and breaks it on the second try, then you'll have something that's a higher probability trade. Now, I want to welcome any new visitors to the YouTube channel. I really appreciate your time. I spend a lot of time and effort on these charts to give you objective and accurate levels to trade against. I think that my calling card are the technicals, and if I can take that burden off of you so you can focus 100% on execution, honing your skills, that's what I bring to the table. And if you appreciate that, hit the subscribe button, the alarm bell, the like button, and plus in the comment section, leave me a stock or a sector you'd like me to go over. I'm happy to do that for you. And then I can't cover everything, but if you tell me what you want covered, then I can do that. And then over in the show notes, you'll find a link to the website where you can drop in your email address, and then that way, whenever I publish anything, whether it's a trade idea, a market observation during the day, morning, noon, or night, you will get it in your email box, and we'd love to have you. And you'll also get an invite to our trading room, where we've got a motivated group of aspiring traders that you can gain and share trade ideas, and a lot of good guys and girls in there. So I encourage you to do that. Long-time listeners, thank you so much for sticking with me. Please pass the link along to others in your trading circle. Help me expand the channel. I really appreciate it. So what I've done in the FATMAAN names is I've toggled between the daily charts and the 60-minute charts to give you the best, tradable look. So starting here with Facebook, had the big drop, and even if you missed that drop, if you engaged our bracket trade that we talked about, as we do on any kind of gap situation, that has paid really, really well for you. So congratulations on that. You can see that I've had to go way back in the charts, way back into the middle of 2020 to find these support levels. So now if you're not in it, I wouldn't even worry about it until we get down to 200, where we may see a bounce, or it may fail if things, if just everything goes to hell in a handbasket. I would wait until 200 comes into focus, and then I see on a break of 200 probably going down into the 180, 185 range on that one. Yesterday, Apple held up pretty well. I mean, it was down 2%, but it was a relative outperformer with the Qs down 3%. So our levels have been working great, stopping and turning on a dime at the different levels. Here we had the initial breakdown. We back tested this 173 that capped both of these tries. Now, we gapped down yesterday below this 172, and then we came down to 170 immediately, and then down to the 50-day here at around 168.50-ish kind of a level. I think if you break below that this morning, you're going to be looking at 167, then 165.5, and then we've got a big gap to fill down here at 163. Tesla, here on the daily, we got capped at 1200. We broke the $200 trading range, which projects down to 800 on a break of 1000. We came down there, made a run at it, 825, and then have spent quite a number of days in a narrow range. And you can see here that the 200 comes in at 861. If you are not in it, I would just swing trade this one on a break of the 200. I don't see any point getting involved at this point, if you haven't already been involved, to take any kind of position here as we come into the 200. I think you wait for that key level to either hold or break, and then you take a swing position either against the 200 on the long side if things stabilize, or you get short against the 200 on a break of 200 of the 200 there at 861. So it's a very key spot on the chart, and either price stays on the right side of it or it gets on the wrong side of it. And so I think that 861 level is the level to watch on Tesla. Microsoft, we've been talking about this 300 being the pivot yesterday, and actually several other days before. We gap down, and we have this open gap that runs from 288 up to 293. We had penetrated it before, it held, and now we're right back at this level we were at just a few days ago, right here. Let's just call it 290. So I think that's your pivot today. And a more important level is this 288. What you could see is a move down to 288 that holds, and you get a little reaction bounce, or it breaks, and in that case, you're going back to the January lows back here at either 282 or even all the way down to 276. So I think those are your levels this morning: 290, 288, 282. If this holds, I could see a kickback rally coming back into 293, where, given this was a low here, I would think that would hold, and I would be viewing that as a place to initiate a short with a stop just above, and then that would give you an anchor position, to be short against that level, and then at least look for a gap fill. I think you're going to get that gap fill no matter what. So that's what I would be playing for. Amazon. This is another one that actually held up pretty well, 2%. We came right up here to the old gap where we saw this muscle memory here at 3,200, and then gave up the ghost, and we're back to the top of the big earnings gap up. So I think 3,100 is your clear pivot. This may be a good lottery pick for today. If things get crazy and we get some kind of waterfall type look where this thing comes down, a lot, that'll be a game time decision. Remember, only bet what you are happy to lose, because they call them lottery tickets for a reason. So remember that. So 3,100 is your pivot here. Google came back up to this prior high at 2750-ish and just let go the rest of the day. And now we're below this prior low, 2660. So that's your pivot. You can stay short below 2660 and look for these lower levels down at 2615 and then 2580, and then you can see the January lows back here at 2515-ish type of area. So definitely in a downtrend there on Google. Netflix actually down 3%, down at the bottom of this trading range, which is let's see, about $20 wide, something like that, maybe $25 wide. So a break of 387.50 would bring you down into this 370 range. If that doesn't hold, then you got the prior lows back here at 360 to shoot for. Moving on to semiconductors. Had a rough day yesterday, gap down. We had the open gap here that runs from 270 down to 265-ish. Any kind of check back to 270, I think, would be a place where you could try a short. I actually looked pre-market, and it's trading right around 270 now, so it had made a little bit of an overnight move higher. If you got something back into 273, notice where the large volume over price bars are. That's going to represent a lot of resistance on the way back up. So if you got something in a bounce into 273, I would definitely be trying a short there. Now, yesterday into the close, I got short looking out a week, and I bought some 265 puts, just looking for this gap fill for starters. So today, if we get a bump up to 273, I would probably, well, I might add to the position either with 270 puts or just get some more at a cheaper price down at 265 and just bank on a gap fill there. That'll be a game time decision, just thinking about it. Now, remember, I wanted you to remember we talked about, your spider ETFs. If these $1,000 options in Google and Amazon and all this stuff is, not in your price range, or it makes you nervous, or you're just not comfortable with it, remember, XLY, 25% of that is Amazon. XLC, I think 44% of it is Google and Facebook on a cap-weighted basis. And I think Disney is in there. I think Netflix is in there. So you got to, if you go to any ETF website, you'll see the weighting percentages for those ETFs. So if you want to participate in either a bullish or a bearish trade on those larger cap names, you can just rotate down to the corresponding spider ETF and play it indirectly that way. I think that's a nice way to approach it on those really expensive options. Now, wrapping up the video, I want to, this is AMD. If you're interested in a specific name, this is a pretty nice setup right here at 112. So you get a break below 112. That's going to open the door to a bigger move down. As long as it holds 112, the bulls survive, as it were. But you can tell bearish structure, breakdown, kickback rally, then a rollover. So this was a bear flag back here. So anyways, 112 is a really key spot for AMD. But now moving into ARC, I think all these are going lower. I've been saying it for a while, trying to fine tune a re-entry after we participated in some of these moves on the ARC. This is the weekly. I just wanted to show you a projected move based on the technicals on the weekly chart. We had just notice how these bear flags work. Leg down, bear flag, measured move, bear flag, measured move. So just putting the crayon measuring tool here, not trying to even get really precise about it, you see this projects down, into the low 20 range. Might see some support here at 25, but I think there's more room to go on these ARC names. If we go back and look at the daily on ARC-F, 30 is going to be a nice level for you. And then here at 2850 was the prior low. And if that breaks, it will usher in more selling. Quickly now, ARC-G just got a re-entry signal yesterday at this 4750 area. I still think if you got any kind of a kickback, or if you were willing to take just a little bit of heat up to 4750, I think you can be short this one. I think your first stop is going to be right around 4550, but then come down and revisit these lows down at 43. Flagship fund got a re-entry yesterday at 6950. If you got short that, I would stay short. looking for 65. Remember, this is the one where it's got all the Tesla in it. So you could also set yourself an alarm on Tesla at the 200 as we discussed, and then that could be your entry for ARK-K on the downside if Tesla 200 breaks, because if Tesla's going lower, I can assure you that ARK-K will be going lower as well. Wrapping up with ARK-W, the web one, got a re-entry here on a break of 91. We've been showing this chart all week. So got a large volume over price bar there. If you got a kickback rally, if you're not in it, you got a kickback rally to 90.5, I would enter a short there with a stop just above. Here in the middle, kind of a tough no man's land place to put on a trade. I would probably wait, and you do have a ledge here that I don't have marked, maybe right around 86. You could put a level there right here at this prior low and use that as a pivot point for going lower, but then you've got support coming in down around 82. So anyways, I think all these ARK names are going to head lower. Okay, let's wrap it up. Just a quick recap. Bear market conditions, higher volatility means reduce your position size and simplify to the names that you really know and tend to do well with. And remember, 3-day weekend. Watch those market hours from 2 to 4 as a real read on risk sentiment, and take a look at gold. Breaking out on the charts, looks fantastic technically for a bigger, longer term move. And so we'll see. Oh, lastly, oil. If oil's been coming down, I'm a long-term bull on oil. Don't have nearly enough energy exposure. I want to figure out a place where we can re-enter or enter oil in a bigger way on this pullback. So I'm going to be working on that over the weekend, and hopefully we can get a pullback into $80, something like that, where we can get involved on a longer term basis, and then see where that takes us. Okay, keep your wits about you. Don't get flustered. If you do, step away from the desk, then come back when you're calm, and have a good day of trading. We'll see how it goes. I'll be in touch during the day when and if I see any major developments. This has been Chris Buss with Traders Profit Compass. Talk to you next time.